Top three things in my notebook this morning are number one, the U.S. dollar, number two, the 10-year bond yield, and number three, U.S. stock market sentiment. So let's just start with the dollar first. If you get the dollar right, of course, you tend to get a lot of other things right. Getting the dollar right for the last couple of weeks has been interesting, if only because it has done the exact opposite of everything that was deflating in January. But again, this morning we get actually a dollar up move in the face of a down yen move. So again, we continue to like the Nikkei and the dollar in both of those real market terms. The second point would be on the 10-year bond yield. 10-year bond yield obviously has just gone straight up in my face for the last 2 weeks. We've been bearish on bond yield since January of last year, of course, where the TLT was at 104. But this has not been a good start to February. Obviously, every day feels like a body blow, and every day I'm getting asked if I'm going to give up. I don't give up, but at the end of the day, if you look at the 10-year risk range, I think that's the more important part of the process at this point, and I do think you're going to get back down to 1.7% at some point throughout this year. Final point, equity sentiment. Bull-bear survey, again, the II bull-bear survey, which comes out every Wednesday, has now gone right back almost to its all-time high to the bullish side. If you went back to people being in the fetal position in U.S. equities, which was, of course, February the 3rd, you'd recall that the bull-bear spread actually hit a 6-month low. Again, people get bearish after things go down, and they get bullish after things go up. So again, this is why we use this as a contrarian indicator. The bull-bear spread has now shot back up to 56.6% to the bulls, 14.1% to the bears. That's 4,250 basis points wide to the bullish side, with the bears being pretty close to the all-time low. So again, understand that sentiment is not your friend if you're buying the S&P 500 at 2110. We have not been bearish on the S&P 500, but I'm just saying at 2110, sentiment is certainly extended. And those are your top three things.